All right, good morning, traders. Welcome to the Bookmap Pro Trader webinar series, Mastering Trade Management. Today we have Scott Pulcini, and he's really good at his trade management. As tips and tricks I've learned over the years from Scott for trade management have really helped, and I think you guys can learn a lot as well if you haven't already. Anyway, you probably know Scott's story. He's been trading for over 20 years and was responsible during a certain time period, 2002 to 2005, was trading about 10% of the S&P E-mini volume, which is incredible. And the amount of risk and money per tick is just still, still to this day, still blows my mind. I don't know how he did it, and nerves of steel. Nonetheless, anyway, let's move on. Uh, uh,
I'll actually show you how I did it today. I
oh,
have
okay,
some
okay,
videos.
excellent, excellent. Because, like, really, I mean, just like you're talking, what, I don't know, 5 grand a tick or something like that, and it's just
Yeah, I
like,
mean, depending on the size I got on, but there
yeah,
will be a caveat. It's not for kids' ears. I'm talking to myself the entire time, so anyone who's offended by swearing or just be ready for that. But
yeah.
I don't know.
All right, all right. So this is R rated. Anyway, let it be known. So anyway, Scott's an expert scalper, but he has this innate ability to quickly read the order flow and volume within the price patterns, which has served him very, very well. Here's Scott's contact information: scottpulcinitrader.com is his website. You can reach out to Scott at scottpulcinitrader.com. You also have his Twitter and his trading room here. I'll put these into the chat so you guys have them and you can reach out. I got to go through the disclosures and then we'll turn it right over to Scott. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, Scott, take it away. Let me present your screen here. Hold on, and we can get going. Or you present your screen, and then I will share it. Okay, got it. Okay, we are good to go.
All right. Good morning. So I'm actually, it was supposed to be short here. I mean, so we're trying to show how to use this dome. And here I have not traded live using the book map lately. I've been using these rhythmic domes for my trading strategies. So we were experimenting here, and I've been clicking, and so these are the columns I was talking about, Bruce. So I got them back all up. I don't like trading through the charts. You can see here I was like clicking on the chart and accidentally putting in orders. So this is how I like to trade, and you'll see my prior trading. This is all I used to do. So if I do put on trades on these, this is just sim mode. But we have these trading strategies that I use, and I have an Apex account set up to all these to keep track of the stats. But these are all my strategies, aka important areas that I put on orders, looking for volume events in those specific areas. So we'll go over that as the webinar goes on. But and then we'll go over the spreadsheet and how I manage my trade. The What you see here is actually the zone drawing tool that's pretty new. Developer in my trade room was able to build that, and it's just displaying this information on the sub chart. But you'll see, like, as I put in orders, this is basically telling me where my stops and entries and everything else. If you're looking at this for the first time, you probably are saying, like, what in the hell is this? But, well, it's not difficult when you know what you're looking at. But I did try a short here while I was trying to talk to Bruce. Yellen was talking right now as well, right before I got on. I don't know if she's still talking, but As I tell my trade room every day, if you're going to trade during Fed speak, Yellen speaking, etc., you're rolling the dice because one keyword out of their mouth, the market can, no matter how good the trade looks, one keyword, then the market rips the other way. So you've got to decide if you're okay trading while these people are talking, because you are, like I said, rolling the dice. So anyway, I tried to take a short off of this guy. There's been a ton of buy ice. I don't use cumulative mode. Bruce does, and he said there's been like 12,000 buy ice since like 7:30 Central. So you can see some of these zones are drawn. So somebody's down here, and then I had this little blip of sell ice that I tried to trade off of. What I should have done is just traded off this big area. But we'll get into it as I don't want to do the shoulda, woulda, couldas. We'll put on new trades as we get new events, and this is a new event actually down here. It was a buy ice event. So I was short off of this. We'll go over the thesis and everything else, and then a new volume event came in, and I actually got out of this on accident because I was just screwing around with this. So I took a loss on that, but I'm trading, again, this is sim mode. So bigger picture here, let's just take a look. So these are my inflection zones, aka Izzy zones, that I will trade off of, just one important area, and one of the important areas that I look at to trade. Right now, we're actually coming back into an inflection zone. So you can see this market gap down here. So this bounced right now at a pretty important area. So this was a balance area. This broke down from a balance area, and it basically bounced off the top there. If this gets through this high volume node, which is basically a high volume node, HVN is just the middle of a balance area where most of the trade occurs, just a general area. But you can judge how when markets trade through them or bounce off of them, it gives you an idea what's going on. So right now, this thing came close to the high volume node and it's bouncing. The point is, wouldn't surprise me one bit to see it come back and retest all this activity up here. But if it gets through this guy, then I'm expecting a whopper sell-off. On top of it, all the way down has been buy ice. So some entity has been buying this like crazy, and it looked for a while here. As you can see, I think it's the white line on here. You can even see it, but there's this white line as this buy ice came in. Turn off this so it's not confusing people right now. Market pulse. So you can see all this buy ice coming in is basically one entity. And you can see it on the chart there, that white line. So, and then they continued. There's even more here. This was 2,000, 2,100, and then all this. So then a little sell ice came in here, and then they just continue to buy. I don't know if this is the same house as well, but somebody in here is trying to support this market. Usually, paper is, they're right more than they're wrong, but they're not always right? So we have an actual setup called broken ice when they're wrong. But the point is, if someone's big enough, if some entity's big enough, they could just keep putting in orders until the market finally relents, right? So, what I've said from day one on here, and there was a misconception early on with all these so-called competitors with Bookmap, where they're like, well, this stuff, it doesn't just mean that when you see buy ice, you just get long. And I've never said you just get long if you see buy ice. I said there's a tendency for this to hold because it's the big money. Like I said, if they have unlimited size, they can just keep putting buy ice till the market relents. But they could be wrong as well. So what we do, it doesn't really matter what they're trying to accomplish. We mark the area, aka these zones, right? And then I have specific rules in trading these zones. And when we do trade them, I have specific rules. And when I deem I'm wrong, so on and so forth. So right here, basically, this was again. So I'm always defaulting to the most recent event. So you can see more bias came in here. I can trade that independently. There's a couple different trading strategies. Potentially, I can trade down here. First, I want to see what this is. Algo guy. So this is an exponential moving average ribbon that we use to help qualify certain strategies. So this is bearish right now, meaning if the blue exponential moving average ribbon, and these are just smaller time frames, and then this is the big time frames. If the blue's below the red, it's a bearish market, kind of trend down market, right? So I have specific strategies where, like, these volume events in themselves are edges, right? So that's what I've said from day one, because you're seeing what's going on real time with the big money, and then the stop runs, which is usually retail traders puking out positions, so on and so forth. So these on their own are an edge. Then when you can apply these volume events in important areas, then you have an extreme edge, right? And again, that's all my trading strategies are, right? So there's the inflection zone trade, the inflection zones I was just showing you. There's nothing really here, but so these two strategies, the bark and the lick, are basically just any volume event anywhere, or it doesn't even have to be an important area, and I'm willing to take it if certain conditions are hit because I know this is an inherent an edge in its own right, right? So bottom line is this is a bullish setup off of here, but for barks and licks, which I demand an ATR, that's that blue line, a retest and a confirm, I would take a long. Algo guy is my filter for the barks and the licks. That is bearish, so I'm not taking a long off of this setup. There may have been something else down here, another area I could have gone long, but that's already passed. Let's open this back up. I had to turn it off because I was chirping here. I turned them off so that I don't know if Yellen's still talking or not. So as far as these other areas that I look at, I didn't really see anything down there that I would have gone long off of. So, you know, with some of the trading strategies we have these are Ludwig levels. Actually, let me share this document. It is here. I don't know where to put this right now. There's, you know, how I post this, where I could post this. You there?
Yeah, sure. See, well, yeah, just copy and paste, or like the share button over there on the kind of right hand side. You'll see it, blue button says share.
Seeing that.
It's a blue upper right hand corner share.
Let's just do this. Over here.
No, you go back to your document. Yeah.
Well, yeah. Well, I'm gonna copy the link. Where do I share the link? Is what I'm saying.
Okay. Yeah. I was just gonna make sure it was the right link. Anyway, just put it into the YouTube, or give it to me. I'll put it into the YouTube.
Okay, I forgot. Yeah, I'm sorry. I forgot we were even on YouTube. I was thinking we were just on Discord. Sorry.
Yeah,
So,
in
yeah,
Discord as well. I'll put it in.
I'm struggling here, guys. Uh, that's what I was saying in Discord. Where do I put this right now? What room are we in? Is what I'm saying.
Yeah.
I don't see where to post it.
Yeah, that's fine. I'll post it. Just pass it to me.
Kind of thrown off my routine today. This is how I
Okay.
usually do things. That's
Got it.
All right. So anyway, I did not take a long off that last event. I was short, stopped out of that, and now you can see here. So these are the important areas I look at. These are market profile composites, where I will trade the edges if we get a volume event. So this is coming up here. I'm aware this is a pretty important area as well. You have top of this one and the bottom of this one. So if I get a volume event, I would take a pick trade. So again, that's just one of my trading strategies. That's this profiles encourage is what we call it. Some of these are comical names to help be memorable and you know, that particular strategy. So let's take any trade that moves into a market profile composite high or low. So this hasn't happened yet. So what you know, as a trader, you need to be aware of your areas and not be scrambling once you start to hear the volume events, like where are we, right? So I should already know, okay, that's it. This gets up here. I know I'm ready to take a pick if there's a volume event, right? And then there's other things up here too. You got VWAP and you got yellow lug. So these are, we call the Ludwig levels lugs. So there's a lot of stuff up here. If I get a volume event, I'm happily going to go short. We shall see. Other than that, I did not take a long off that volume event. So this is the thing, right? So for me, for my important areas, I didn't say anything to go long down here. If you, for some reason, had something that you're looking at, an area you deem important, that's great. You know, it's not for me to say what you're looking at, if it's important or not, that you may use in your trading. What I'm saying is whatever area, whatever you are looking at, to demand a volume event in that area, and it makes that area that much more important, right? Because this is real-time volume coming in, aka traders placing bets traders that are, so someone was selling right into a big mouthful of buy ice. They're wrong, right? So this is fuel energy, and the way you have to look at it's very simplistic, but it's what's going on. The traders that sold into here are not feeling very good as it does that, and then they have to puke up their positions, right? So that leads their moves. So that helps you kind of filter this algorithmic trade, as I call it. And you can see the algos in here on the heat map, right? And they're just putting in orders and pulling them, so on and so forth. 90% of the trade, 85, 90% of the trade are algos. Then when the big money comes in, then that's where you get the extended moves, because there's the big money's absorbing orders, so on and so forth. So my point is, look for these volume events in your important areas, and we have distinct rules for trading these. And so again, this is about a trade management. It'd be nice if I get a trade on. Actually, there was something in crude. Let's take a look at crude oil. So I'm watching. I have basically 20 markets that I'm watching. I understand most people don't have that type of bandwidth, but I do disagree with traders that just stare at ES all day long. Like, you want, especially when you have this kind of information. So as long as you know the thresholds in your market, thresholds meaning the amount of volume that is important, tradable for that particular market, then you're doing yourself a disservice if you're getting all this information. You're not taking advantage of other markets, right? So, I'm not saying watch 20 markets, but I am saying you should probably branch out to, maybe two or three at least, where if you get this activity, you're ready to go. And it's like, okay, there's nothing going on in ES, kind of like right now. I'm going to hop over to crude. I heard a volume event. Here's the zone jar. By the way, we'll go over all this too, but this is in the document. I think Bruce shared it. That's here. That's the very first thing. So this is on the Bookmap Marketplace. As you can see, this is the basic tool, but if you get this, I will send you an email with the instructions for the Pro beta. So Pro gives you a lot more as far as entries, and this is all based on my spreadsheet, which we'll go over. But if you do get that, then you'll get I will give you access to the Pro beta. Anyway, that's that. We'll go through all this. So, the course is basically, well, let's first see if there's anything live, and then we'll go over all the other stuff. All right, so we got a stop run, right? So this is a sell stop run in crude. And, and I know a lot of you guys want the equity stuff, and if there's something goes down in there, we'll hop back over there, but it's just pretty quiet right now. Actually, let's take one quick look here. Then looks like there was so I was long NASDAQ a little bit ago, but I stopped out of that, I believe. Yeah, I stopped out of it. I shouldn't have stopped out of it, but anyway, I was long, not long anymore. This is a new event, so this is obviously. So the way I judge, I gotta turn this down a little bit, guys. The way I judge these events, so this was a buy stop run, right? So again, pick it up on the sub chart here. So turn off my marketplace here. There we go. So I picked up this event here. So it's 154. So NASDAQ, my threshold, which is the amount of volume that I deem important, tradable, that was 150 buy stops there, right? So the way I judge these, if this market's able to push at least a 5-minute ATR, average true range, out of the area, that distinguishes whether it's a bullish or bearish setup, right? So that's that blue line on the chart. If I plug this in, this is the same thing. So this is on the trade management stuff. The way I have this trading spreadsheet up, again, you get this as part of my trade room, or you can get it independently. If you can't get in the trade room, you can subscribe to this on this website, Pulcinitrader.org, so you can get this actual spreadsheet I'm using, and then the inflection zones I was talking about. But the way this is used is you plug in the volume event zone, right? So that was 17,396.50. And then 17,390 quarter. So it's a pretty narrow zone for the volatility that's going on right now. Again, I don't know if Yellen is still chirping or not. Hopefully we'll hear it. And then the current ATR. So you can see here, I'm using the Thinkorswim 5-minute ATR. So you can see it right here in the middle of this is very important, right? This is telling me the current volatility in the market. Very, very important, right? So what we talk about all the time is a lot of traders, they want to use these static stops where, I get all the time, when I'm showing this, because my risk, we'll go over this, but my risk is going to be dependent on the size of the zone and the volatility. A lot of traders will come in here and say, well, when I trade NASDAQ, I want to risk 10 points to make 20. Well, that's great in theory, but that's imposing your will on the market, right? The market doesn't care that you want to risk 10 points. And I can tell you in this type of volatility, the ATR is almost 30. What does that mean? It means it's rotating 30 points every 5 minutes. You put in an order, you're only risking 10 points. You're just opening yourself up to randomness, algo chop. And you can see these algos in here going haywire, right? So the way I trade these, aka risk management, is when I do enter, right? So say this goes down. Let's just take a look at algo guy here for a second, see if it's bullish. I might be able to take along here. This is flipped. Natural gas. So this is bullish for me. So I could take, so you could see out, this is algo guy. Again, the blue is the smaller term exponential moving average. This is a longer term. That cross back up. So now my bark and lick strategies, I can go long. And there may be other ones too. I just haven't had a chance to look. But so for bark and lick, I demand a certain pattern from watching so many of these, right? So if it pushes the ATR out, that's the blue line. And we'll look in the spreadsheet. It's going to be probably close to the same. This is in beta mode. So again, when you get the pro, this may be off. So you got to be very careful just trading off the chart if the ATR is up. We'll get into that. But let's just say this is all accurate right now, right? So if this market's able to push the ATR away from the zone, I know that's a bullish event. So now I'm ready to take longs for certain strategies. My barks and licks are alive right now for a certain pattern. So then what I wait for is a retest of the area. And this is just, it's uncanny how often these markets come back to these volume events. We actually have a reversion trade, and that's these dotted lines where you play for that. I'm not going to go over that on these webinars because it's more of a scalp and it's very hard to keep track of because they're very fast. But just know, like, if you are like most traders want to be scalpers, and it's so hard in this kind of environment. I'm going to show you my old trading where I'm going to show you why I was able to scalp back in the day. It's no longer valid, right? That's why I went from $1 million scalper to couldn't make a dollar, because these algos are running the show, and these orders are fleeting now, right? So the point is, if you have to be a scalper, or that's the only way you want to trade, the reversion trade is one of the best ways to scalp these markets. And again, I'm not going to go over those right now, but you can learn that stuff. So anyway, back to the position trading, right? So again, this spreadsheet shows two different types of trading. The top here are for my position strategies, right? This is where I entered the zone. I entered the ATR, right? And now this is telling me these prices where I can go long or short, right? So if this validated as a long, if it touched 425 quarter. Again, this is probably going to be off a little bit. This was showing 430 because this ATR is showing a 30 ATR. It's not 30 ATR, it's like 28. So regardless, this is a bullish setup. So I already know that hit the validation point. Then if it retests, that's the retest price, 99.50. That's this yellow line here. And again, it's going to be off a little bit because of the ATR, but if it comes back here, retests this zone, moves back out, my entry is going to be there, right? And then the way I trade these, like we just talked about, you can see the algos here running people ragged. So if I'm going to put on this trade, I will get in there, and my stop is all the way down here. And I can just hear people groaning, like, what? You're risking 80 points on that trade? That's great. I'm willing, the volatility right now is telling me, if this trade works, if I end up getting long here, that this can move a minimum of 80 points and probably more. And then that's where you can, you have your longer term targets and so on and so forth, right? So if I go long here, I'm looking at NQ, right? So actually I'd be going long right into a red lug, and that's not usually a winning proposition because these things are incredible support and resistance areas. But say I went long here, and say I'm not looking at the Ludwig levels, and I'm like, okay, I'm going to take that bark and lay if it does this. I don't know why that's pink. Sorry. If it comes back to that area, it moves away, and it gets in here, and I'm like, okay, that's my target up there. I know with the volatility and so on and so forth. So that's 17,560. So that would be 130 points away. That's almost a 2-hour trade if I end up putting this on. But we got some gold activity too. Anyway, what I'm looking for is that. So, well, back to the stop. So this is back to the trade management, right? So I've just from watching literally tens of thousands of these things over the last 8 years, I determined this is the best way to trade, just so I don't get algoed. I don't want to let these guys, this entity, even right here. This is obviously one entity just flipping the orders in here, or flipping the. They're not actually trading; they're just putting in and pulling offers, bids and offers. They're trying to take your money, right? Don't let them take your money. If I put on a trade, if I end up getting long here, I'm forcing this to come back, the ATR. I'm forcing him to get through the volume event, and I'm forcing him to push another ATR out for me to say, Uncle, you win on to the next trade, right? And I know that so many of you are just, I'm not going to trade risking 80 points. Well, then you're opening yourself up to this. Yeah, you may get lucky and then catch a runner and it runs away. You don't have to worry about it. If you're only risking 10 points, 20 points, especially with almost a 30 ATR, you are very, very, very likely to get whipsawed out of the trade. So anyway, here we go. This is the pattern, right? So if this comes back, it's actually, and what's the great thing about the zone drawing tool, it announces. We call him Bookmap Bob. So it always announces the subchart stuff, but now it'll tell me if, like, for instance, there was just some activity in natural gas here into the number. So it drew the zone. It told me about the zone. It told me that it retested the zone. Actually, it's this one here, right? So this is a perfect example. This is into the number, and this thing, sell ice came in, market moved away, right back to the zone. It's unbelievable. So that's the reversion trade. Again, I'm not going to take those trades right now, but just to show you the pattern, and it doesn't matter what market you're looking at. It's crazy. It really is. Anyway, there you go. And you see, I was just announced it too, right? So this is great if you're watching other markets. You don't have to stare at your market. You know it's retesting this area. So now I've got my conditions to potentially put on Bark and Lick lungs, right? So let's see if there's liquidity up here. It's a little bit up here, so I'm willing to take that trade. So Barks are literally, it's just blind ATR retest confirm, right? So that's what I'm going to take here if that comes back. That's just one trading strategy. It doesn't have to be in a specific area. And then the lick is the same, is basically a bark, but my main target is that liquidity up there, right? So those are the two longs I will take if it comes back here. So you can see on here, this is everything on here is what's in the spreadsheet. So back to trade management, right? Very, very important that you put in, that you know what you're willing to risk per trade, right? And these are very aggressive. Again, these are all under Apex accounts. We'll get into Apex a little later, but I'm risking. So all these Apex accounts are worth 5,000. I mean, they say $150,000. They're not $150,000 accounts, right? I'll just show you this right here, right? So these are all the Apex. This computer, sorry. I'm gonna show you this here, and then Bruce, you got questions? You can throw them in here, right? So these are all the strategies that I'm using for these. So you can see, like, here, this is the list of. So each one of these has a Apex account assignment. Let's just cover Apex quickly here, right? So Apex is just a trader funding. These things are popping up all over the place, right? So there's a lot of activity in gold. Let me just take a quick look here and we'll go over that quickly. So gold's ripping off the page here. All right, so we'll come back here in a second. Anyway, if you're underfunded, if you're working on, say you come in my room and you don't know what's going on, your learning curve is going to be pretty steep right away. We're not doing anything that difficult, trust me. But when you look at the stuff, you get confused. So anyway, this is a great way for you to work on your trading. You have some skin in the game. So, because a lot of traders are like, oh, I can't trade sim. I don't react the same way. And I can understand that, because you just, like, you let trades ride because it's, you're not losing your car payment, right? You're like, oh, whatever, if it comes back, comes back. With this, at least you have something in the game, right? So for any current discount that they have going, just use that, and whatever it is, like right now it's 80% off of these. So meaning if you do, so these are all mine that I just showed you. I do the 150. So it comes out to like $60 to do one, right? The great thing about these is if you get in here and you're practicing and you do well, right? So for instance, I hate how this thing rotates, right? So let's wait for the 150. There you go. So the goal is to make $9,000 before you lose $5,000, right? So that's why I put that risk in there, the $5,000, right? So my point is, if you do well, you're practicing and you make the 9 grand before you lose five, now you're funded, right? So you got to be careful. There's rules as far as, and there's videos on my, go to Twitter. It's my pin message. I did the video with Apex, or the webinar with Apex. The point is, you can be profitable, and this has happened to me many, many times, right? So you're trying to make 9 grand, right? So you get up to 8,500, and then you take like if you pull back 5 grand, you're out, right? So that if I pull back 5 grand, that means I'd still be say I was up $8,500. I pull back to 4,500. Well, I'm still up 4,500, and I lose the account, right? So that's what makes it, where you have to learn to really talk about risk management. That makes you have to really monitor your risk, right? So the point is, like, if it's a real account, you're not out of the, you're not out of the, if you were using your own money, you're still at 4,500 bucks. In these, you have to really monitor the pullback. But what I'm getting at is, if you do well, then now you're funded, right? And now you don't have to trade your own money anyway. So to me, it's a no brainer. Again, this is the one I put my name behind. I've been using these guys for 2.5 years. So that leads me to this, is because I started doing that because I was trading live my own personal money on these webinars, going back to the very first ones I did with Bruce. And when I'm on webinars, I just continuously make mistakes. And I was losing thousands of dollars on, I'm like we're doing right now. I'm covering all these markets, and I have an order working in NASDAQ. And then I'm like, oh, here's something in gold. And I come over to gold, and I forget I have that order. I was supposed to cancel the order or whatever, right? And then all of a sudden now I have a position on it. I don't know. And I look over and I lost $3,000, right? I got real sick of doing that. So, and back in the day, until this is about a year now, all of these were in my mind, right? So I would just be on a chart. I mean, Bruce can attest to this because this is all I would do, right? We'd be looking at ES, and I'd be like, okay, here's an inflection zone. Oh, here's a lug. Here's a profile, a market profile area. Everything was like jumbled into one trade, right? One trading chart, for instance. So for what I was doing, so I decided to split them out for each strategy and then assign an apex to them. So this is great for tracking purposes. And then I'm not also, pissing away money because I'm not paying attention to stuff. So anyway, that's what this is here, what I was showing here. So these are all these accounts, right? So you can see some of them, like this one blew out, right? And then the rest of these are slowly, but surely inching their way up to funding, right? So this one's very close. So you can see here, right? So the bottom line is, every one of these will be profitable over a series of trades. Why? Because as long as I follow my risk rules, first of all, but because the edge is inherent in these volume events. So I don't care. You're about to see me potentially take that bark and lick trade and NQ long. If this comes back out of here, I got to get these orders set up, by the way. We'll go over this, but this is inherently the edge. So I don't care what area I'm putting them in. I know over a series of trades, it will be profitable from my experience. Again, you can take my word for it. And if you don't even want to take my word for it, this is what I say all the time too. That's the beauty of Bookmap too. You can get this. And even now the zone drawing tool, again, that's available. When you replay the data, you can go back and you can replay as long as you have the data feeds, and you have almost 4 years of data feeds. If you join my room, that you can go back and watch. You replay the day, it'll draw the zones for you. Try it out for yourself. Confirm it for yourself. Take these trades like we're talking about. You don't have to take my word for it that this is an edge. Go back and run the day. Say, okay, here's a volume event. Here's one of my areas. Let me see what I would do. And you can actually bring this up like this, and you can actually put on trades, right? So don't take my word for it. Go in there and trade. Let's see what's going on here real quick. So we had something in Russell. Didn't even hear this volume event. Let's see what's going on. So if that comes back out of there, I'm going to take the longs. I have not put my orders in yet. We'll do that here in a second. I just want to see what's going on with Mr. Russell. So you see here, it's the same stuff, guys, all day, every day. Huge buy ice event. Market moves away. Hey, look at that. It retested the zone over and over and over. So anyway, this would have been a potential short on the bark and lick, right? I can actually maybe still go short here right now. And here's the newest event. So let's check our filters. You can see I could be going short here, right? The blue algo guy, we call him algo guy. Blue exponential moving average ribbon is below the red. So that's my filter for barks and licks. So right now I should be short, and you can see this is where, if this ATR is correct, that's where I should have been short. And the beauty of this, it tells me the position sizing, everything else. So this is the newest. So that's back to this spreadsheet. Sorry. And if guys, if I'm talking fast, if you feel like you're drinking from a fire hose, I am trying to trade live. I'm trying to go over all this, so I need to get it out. Right. So that's why I'm talking fast. But let's just plug this in. So this original zone was this one, 1983 to 1982.2. And Bruce, there's questions, throw them in, but trying to get caught up here. 1982. I was on with Bruce right beforehand, and that kind of threw me off of everything. My brain was not in full trade mode, so I apologize for the scramble brains when I get on here. All right, so with that ATR, so you can see there's a 50 ATR right now in Russell. So that means it's ranging 50 ticks every 5 minutes. That is pretty high, right? So here's another example. You're going to put on a Russell trade where you risk 10 ticks or 20 ticks. Good luck. You're just the volatility alone is probably going to stop you out of the trade. So anyway, the prices for me to take the barks and licks are all on here for my trade management, right? Plugged in the zone, plugged in, and this may have been a different ATR at the time, but this is what it is now. So for the short, it validated. That was the validation price. That or lower. It got down to 71, guaranteed. It got all the way down to, went 100 ticks even lower than that. Retested, comes back. Actually, I could probably put these on right now. So this is how I do this, right? So I put in my account size. I put on my risk. This is what I was getting at. Like for these Apex accounts, I'm willing to risk 10% on a trade. Do not be risking 10% if you're trading your own accounts. You should be risking at most 2%. And we've had many, many rants on these webinars about blowing out and trading too big. So you should be risking max 2% on a trade, 1.5 to 2% on an individual trade. And the most you should lose is 5 to 6% in a day of your account. If you lose that, you need to shut yourself off and move on to the next day. And when I say shut yourself off, I mean tell your trading firm, shut me off if I hit this amount, because it's like Mike Tyson likes to say, everyone has a plan till they get punched in the mouth, right? Yeah, you have a plan. Oh yeah, if I had 6% of my account, I'm done for the day. Yeah, most people, especially if you're a trader, you're very competitive. It's very hard to just say, okay, guys, yeah, you win today. I'll be back tomorrow. You're like, screw that. I'm trading. I'm going to throw it another thousand. I'm going to risk another $1,000. This is ridiculous, right? They call it going on tilt, and you guys, if you've heard any of my webinars, you've heard my stories of going on tilt and losing, you know, $800,000 two different times a month apart in 2004. That'll leave me here. Well, let's put this in first, and I'll show you a little of my trading. Bruce, are there any questions? Wow,
Yeah,
I'm trying to
there's.
stop myself from going on a rant here.
Oh, I can hear it building. Yeah, I
All right,
know
wait,
it's coming. It's coming. I know.
it is coming. All right, let me put these orders in first. So
Okay.
I should have been short. And so this is back to the trade management. I know I'm all over the place, guys, but I'm trying to cover all this stuff, right? So with this risk, I'm risking $500 on a trade, right? With this risk, if I were to trade the regular contract, I can put on 0.81. Obviously, you can't put on 0.81. So trade micros. There's nothing wrong with trading micros, because even if I could trade one, it's all or nothing. I want to be able to piece out in important areas as the market, and we'll go into the trading zone document, as the market makes money available to me, right? So I have important areas where I'll piece out, not of all of them, but the point is trade micros, and then you can get out of two and still have some on. It's not all or nothing. So anyway, if this comes back, I'm actually going to round up. So I'm going to put on 9, and I'm going to short at 1976.4, which is basically about 10 ticks. I should already been filled. Let me put these in right now. If it comes back, so I'm not gonna just jump in right here, because I just feel like if it rips up, I got away with something by not getting filled. But it's already right here, so I'm gonna put this on. So that's easy. Hold on 1 second, guys. Actually, you want me trading off the chart, right, Bruce? So let's just trade off the chart here. I'm gonna trade regular side. This will be like the old days where I was risking thousands of dollars. Well, I'll show you that here shortly. So if this comes back to, I see, I don't have to. Let's do this real quick. I just need these because I don't want to trade off the chart. Let's add these default columns. Get rid of that. That. All right, so if this comes back, I'm going to take, what do we say, 1976.4? right there. So it's a sell. I'm going to stop into that trade short. I'm about to get filled right now. All right. I'm going to put these on my other accounts too. Hold on 1 second here. Hold on. Of course, I missed the fill on both of them. All right, at least I got that one on. All right, so now I'm filled. So now what? Well, normally, I just filled on those other accounts too. So everything's short. Russell, Mr. Russell. Let me just take one little peek at NASDAQ before I will make sure I'm not missing a trade here. All right, so this, remember I was going to go long here. But what happened? So I got the ATR above. That's the blue line. So that is a potentially bullish setup for me. This is why I wait for this pattern. I never took the long because it never came back, and I avoided right now potential loss. So what happened? Now it got down, and that it confirmed as a bearish setup. It already confirmed as bullish. I don't. This particular trading setup is off the table for me, and you can see by the way where this bounced right in that prior event. I technically could take this one. We'll go over this if this comes back, right? Because that did move the ATR, that came back, and that is not invalidated the long on this one. But this one is invalidated for a long. Why? Because this pushed an ATR out of the zone. So there was no trade for me off of this event. Like I said, I don't want to confuse people, but because we usually, like I say, we want to default to the most recent event, obviously, because that's what's happening right now. There is a way I could go long barking licks off of that guy. So we'll come back here. We'll know very sure. I'll know by the way Russell's trading if it's coming back up there. All right. So anyway, this was the zone I put in, right? So, and I missed getting in earlier, right? I should have been in when it did that, and then it came back, and now I'm in off of that. That's for that zone, that yellow line. That's my entry zone. Entry. So now my stop's going to go up here. But what I can do, because this is the newest event, I can trail my stop to that. It's not that big of a difference now, but it is a big difference if the market starts rolling in my favor and say a new event comes in here. I could trail my stop to that new event. So now I'm not risking all the way up to here. Now I'm risking over here. So we'll see that comes in. But right now, here's my stop. I'm just so not used to trading on this anymore, but we'll put that in there. There you go. All right. So if that comes back, that's where I'm stopping out. I'm forcing this market, if I'm going to be wrong on this trade, to come back. I get filled there. It's going to come back. It needs to come back a full ATR, get through these volume events, and then move an ATR out. More than an ATR, we do 115% of an ATR. Then I say, go straight. The whole idea, guys, if you have an edge, that's the beauty of this. You don't have to question whether, well, you can question whatever you want, but like I said, run the data feed and go back and test these out yourself. The edge, you don't have to question whether you have an edge or not, right? That's where most traders struggle the most, because they'll start trading something, they'll see something works for a week or something, they'll start trading it, and then they take a couple days of losses, and then they lose faith in it, and they don't believe in it, right? So with this stuff, with these volume events, this is the best edge I've ever seen from trading millions. And I used to average, and I'm going to show you guys this here in a couple minutes. I used to average, and you're going to see why I average. I used to average over 1 million contracts traded a month. I used to average 50,000 contracts a day. And back then, the ES was only trading 500 grand in a day. I was 10% of that every single day. That's how active I was, right? I forgot why I got on that tangent.
Because we're going to hear it soon.
What'd you say?
We're going to hear it soon.
Well,
right?
yeah. Here, well, might show this real quick. And guys, I'm telling you, if you don't like swearing, don't watch this.
Viewer
watch these videos.
discretion
You got to remember.
is advised.
Yeah. So hopefully this works. I was messing with it yesterday. Come on. There it is. All right. All right. So this is what this is, guys, I'm trying to explain to you why the simpler you make your trading, the better you're going to do, right? So all I did back then was trade off of that. I had nothing else up. I didn't have a chart up. I had nothing but order flow, right? So if I can make 10, $15 million in a total of 3 or 4 years just trading off of this, it doesn't get much simpler, is what I'm saying. And trust me, I'm not bragging. What have you done for me lately in this business, right? That was literally, this is 2003 that I'm showing you, right? My point is, it doesn't get simpler than trading off the dome, right? So what we're doing with these volume events, we're keeping things very simple. And what's most important, right? Volume coming in, and having rules, risk rules for trading them. And that's it. That you don't have to make it more complicated, right? And then we have specific areas that we look at for these events. That's it. So anyway, let's go ahead and let's again, I don't one, it's a little embarrassing, right? Because when you start hearing me, I sound literally like a 2-year-old child, right? But that being said, so there was a joke back then that people would be walking past. So I got my own office once I started killing it, right? Everyone else had to like team up with traders. I had my own office, and it used to be people be walking past my office, and you're going to see why. And they go in the owner's office to say, who is Pulcini talking to in there? And he's like, oh, he's talking to his imaginary friend, right? So all I would do was talk. One, there's a guy manipulating, and you guys are going to be able to see it because I'm bitching about it the entire time. But I have to talk, and that's why I love educating and doing webinars, because I'm able to talk and not. If I keep it in, my head's going to pop off, right? Especially when you're risking tens of thousands of dollars in every trade, as you're going to see here, right? So that's why I talk so much. So here's another thing before I even start this. This is what I used to do. So once I stopped looking at my P&L, so first of all, this is how it used to look, right? These are who I was trading against. You can't see it that clearly, but I can tell you my nemesis, and you can look it up. He was 990. I think at the time he was 910K or something. All this is the house number, right? So I would go head to head with this guy every single day. Yeah. And then I would also know. So say I'm screwing, it's like a poker game, right? Let's just start playing this and I'll go over what I was doing. Let's see. And the sound chops on and off, so it's good. So like right there, I had 100 on, right? That's no big deal. So right here I had, so you can see the games I was playing here, right? Let's just play this. So this is lots, guys. This is right now I have 300, 260 on, right? I'm long 260. See what's going on here? So this is the game. Whoops. Right, guys, I'm telling you, apologies in advance if you do not like swearing. Remember, I was sitting by myself in an office as a young punk doing this stuff. So anyway, this is the game I would play. So this is what I'm trying to get at with what I'm trying to teach you guys. The games that are going on here are basically the same. It's just algo is doing it to you now, right? So you're going to see, I was hated throughout the trading street, per se. Like people hated me in my own office. There's a story where I was walking into the bathroom and I heard this guy swearing at his screen, F you, Pulcini, you. I'm like, I opened his door. I'm like, what's the problem here? I'm like, why are you yelling at me? I'm going to the bathroom. He's like, oh, sorry. I thought that was you in the market. Right. So I was hated. So the way I hate these algos that are taking everybody's money, that was me. So the point is, I know what's going on. I have a very good idea what's going on because I used to do it to people. Right. And that's why, people come in my trade room and pay to learn from me because of all the experience I have with this volume. Right. And trading the volume. Well, I just want to see what this Russell's doing real quick. Before we get into that, throw the questions at me first, Bruce, and then because I don't want to jump into that and then there's new questions. So throw them at me, if you will.
Okay. All right. So, see, Trader Boy is asking about your room and your ATR. Would the ATR strategy be a viable strategy starting out? He has a number of other strategies, but he's
The
looking to
reversion,
join.
yeah.
Yeah.
Yeah, so that's this part of the spreadsheet. We didn't want to get down to that, but yeah, that's more a scalper type trade. This is more of these are position trades where you're going for bigger moves. But yeah, that's all taught in my room. I go over the stuff every day. I don't. We're actually building out the ATR strategy, the reversion, because it's just such a quick trade. Again, I can't keep up with it on the webinars and stuff. So we've teamed up with a firm. So the same developer who I'm nominating for the Trading Hall of Fame, Johan, he's the one who built this stuff. He is working with the trading firm, and we're going to have these ATR trades automatically firing off. So it doesn't mean that's going to be available for you guys for the automation, but what we will have is exact stats. So we'll say so for instance, we're doing the 1, the 2, and the 3 ATR. Like this is the 1 ATR that just works, so on and so forth. We're going to know exactly, hey, what's the sweet spot for each market, so on and so forth. So, but yeah, you'll learn all this stuff in my trade room.
Okay. Yeah. Trader Boy is also looking forward to a verbal lashing. Um, so
There's been quite a few in my room lately. I've been letting traders have it, guys. So this is, most of the guys. I got into this yesterday. So one of the top traders in my room is moniker's mouthwash, right? And he was not a top trader not very long ago, right? And he has probably gotten the most verbal lashings out of anybody. And when I give a verbal lashing, one, this is not, you don't come in my room and think it's a rah participation room where I give you a trophy for participation. It's if you post something one, if it's against our rules, our trading rules, what we're trying to do, I'm going to let you know. And if you put something that's ridiculous that I know does not work, I'm going to let you know, right? And it's going to be a little embarrassing because I call you out, but that's the point, right? It's to make you uncomfortable so you remember the situation so you stop doing stupid crap is the whole idea. But we call them verbal lashings. They're part funny, they're part serious. But if you come in my room and you're doing something wrong, I'm gonna let you know and I'm gonna let you have it. The analogy I use, whether you like Trump or not, right? It's with his tweeting, right? So many people are so offended by what he says and his tweeting. It's like, do you want to be offended by the tweeting or do you want a great country? Same with me, right? Do you want to be offended or hurt by my verbal lashings or do you want to become a better trader? So that's the way it is. My room is not politically correct. I'm going to tell you like it is. I'm me. What you see is what you get. You're going to hear literally when we start playing this video again, it's embarrassing with all the swearing and stuff, but I am the same person back then, 20 plus years ago, as I am today. So what you see is what you get with me. But yeah, I'll give you some verbal lashings, I'm sure. But you got to be in there for a while too. I just don't start yelling at you if you don't, you don't know what you're doing. You got to be in there a period of time, and then I'll let you have it.
So let's see, just a couple more questions. The question on Fed data, for instance, does that change anything in your analysis and setup relationship to a volume event as it's coming out?
Well, yeah. Well, is there something coming out here?
I mean, if you, so, I mean, you're just, regardless of the news or not, you're still just looking for the volume event.
Yeah, yeah,
I
but
think that
yes, but
answers
no.
the
I think
question.
this is what he's referring to, right? So you have access to this as well. Right? So this is the squawk channel here. This is what he's referring to. I'm pretty sure coming out here in 1 minute, minute and a half, right? So yeah, this is just I'm basically trading into a number, right? So all bets are off. These volume events are the most important thing I've ever seen in my trading career, 25 plus years, right? But this number comes out, I'm see this liquidity starting to pull a little bit too. It's like I'm risking this to rip off the page because there's new information hitting the market. Same when the Fed guys are talking, same earlier with Yellen talking, right? You have to decide as a trader, are you willing to hold this trade to the number? I have the trade on. If this rips up and stops me out, won't be surprised one bit. So you have to decide. Most of the stuff we're doing is black and white, right? With the risk and everything else. That's not for me to say if you're willing to hold the trade into the number, into this number, right? If this rips up, I take my medicine or you can just get out and then put it back on after the numbers, right? There's yes, that it can definitely, these things are worth their weight in gold, the most important thing I've ever seen. But all bets are off. If this number comes out and is bullish, I'm going to get stopped out of this trade. I'm willing to risk that on this particular trade. We're on the webinar. I'm not gonna. I'm in the trade. But yeah, absolutely, you want to pay attention to numbers and Fed guys that talk 25 times a day that save the market every time the market's getting crushed. You get this impromptu Fed guy, and then the market rips like 50 points. It happens nonstop. It's trading, guys. These are markets. You've got to accept that is could happen and does happen.
Okay. All
So
right.
this guy's gonna short validated. I didn't do anything with gold. I'll try to get over there, but just take a quick look. Next questions. You got it. So you can see here, this was a. Sorry, Bruce. Go ahead.
that's pretty much it. I mean,
This was a double win. Sorry.
no, go
I
ahead.
keep
Go
telling
ahead.
you to start. I just keep talking over you. So this was an Izzy, real quick. It was real close, real close. Guys, these are areas. They're not exact prices. So you get these as part of my trade room too, or you can get them on that subscription site, scalpeltrader.org. Volume event at important area, right? So if I was watching, I heard it go off. I just didn't get over here. Here you go. This is a double whammy. What's a double whammy? That leads me into this stuff. This is part of my course and what this is the foundation of my trading. That's not the right one. Hold on. Let me pull this up right here. Right. So this is my course. You can get it through my website, or you can get it on the Bookmap Marketplace. This is the new one. This has all the information that you need. It's updated, right? We as a trader, and you're going to see here, this type of trading. We'll play it in a little bit. Does not work anymore. right? The scalping. You can see me hiding my P&L there and bringing it up and back and forth. So you have to evolve. Maybe we'll start there. I might not be swearing there. You have to evolve. So my original SI indicator course that's on my site, and I just want to give a caveat here, right? Because I had some guy the other day be like, "Oh, I didn't know this was the old one." It clearly says here, guys. So I made it half price. This one was done right here. This is the first one, 2020. I cut it in half. For those of you that are trying to save some money, if you're just starting out, whatever, this gives you the basic information. But we don't have anything, and even says right here, if you buy it, it says this is the original SI indicator course made in 2020. There has been a new course released with a lot of new information. Yes, this is still the same. I'm doing the same stuff now as I did then, as far as finding these volume events and the setups, right? But just know that we've added things and things that are making us better trader, making me a better trader, right? So this goes over everything: the bookmap settings, the thresholds for each product, the subchart, the settings for the on chart, the sweeps, and then how to draw the zones. With the zone drawer, you don't really need that anymore, but you still need it to be able to adjust the stuff if they're coming in or they're not threshold and they're combining. And you probably don't know what I'm talking about, but it shows you how to draw the zones. And these are my setups. Every one of these is in the original course except for that one. We added that one, right? So these are specific things I look for in my important areas. So what just happened here in gold was a double whammy. Whoops, double whammy. What's a double whammy? It is retail trader pukes, right? That's usually not aggressive initiative buying. It's retail traders puking into the waiting hands of sell ice right there. Perfect double whammy in an important zone. Well, look at that. I can't believe that thing ripped out of there, right? So, and it's really surprising it's coming back. Not. So the point is, this is why I'm not going to trade this right now, but that's what we're doing. We're looking for volume events in important areas. Sorry, Bruce, go ahead.
No, I think we're pretty caught up here. Just see, Clan is asking about settings on your stops and icebergs for ES and RTY, but we don't do that. It just takes too long. You get requests for everything, so you can reach out to Scott individually for that, or get his course. So
it's all part of the course. We go over it in the room. You get all that information if you need it, which you do to trade to figure out what's important in these markets. So I'm still short this. I held it through the number. Again, this could just rip off. So this leads me to this rant that I give every week. So if you come in the room, I joke. It's not really a joke. You should have this tattooed to your forehead or your thigh, like a real tattoo. If not, if you can't do that, if you actually have a family and a social life, you can't put tattoos on your forehead, then you should be reading this every single morning until you can literally recite it in your sleep, right? So this is straight out of Trading the Zone. I've added my own stuff here, but this is straight out of Trading the Zone. Get it by Mark Douglas, probably the best book ever written on trading, right? As far as like understanding why you do what you do, how trading is opposite of human reaction and emotion. That's why it's so hard, right? So the point is, I objectively identify my edges. These are how I identify my edge. I don't know if I've mentioned that about 4,000 times this webinar alone. I predefine my risk, right? Just outside of an ATR for both entries and stops. We talked about that. I completely accept the risk, or I'm willing to let go of the trade. Trading the correct size. Does this sound familiar? Just talked about that, right? I act on my edges without reservation or hesitation. This is where I would say this is the number one reason that traders don't make it, right? Say you got in, and also, guys, this is for educational purposes only. It's not to mirror my trade. So if you got short this Russell, one, you get an F for just putting on a trade, not knowing what you're doing, right? If you know what you're doing, fine. You would like traders in my trade room. And actually, I was talking about one. I forgot what I was talking about, but we'll probably get into that. Oh yeah, about the verbal lashings. How he's like one of the top traders now. But anyway, if you got short this, you're probably short this if you're following the rules that we're using the trade room, right? Point is, this is not meant for you guys to be mirroring trades, nor is my trade room, right? So you get so many people that want to go in trade rooms that want everything done for them. Buy here, sell here. Why would you want that? Why would you not want to do this for yourself, right? You're never going to be successful if you're trying to mirror someone else's trading. You don't know how their mind's working. You don't know when they're going to get out, get in. And I mean, this is showing you for me, but what we're doing, but you still want to know what you're doing. So my trade room is not to mirror my trades. It is to understand and do this for yourself. So anyway, what I was getting at is traders will say this is a loser, right? So you say you got on this trade with me, which you shouldn't have, or unless you know what you're doing, and you get stopped out. And then I say I put in another one before the end of the webinar, and that gets stopped out. Well, then you get another setup. So you get you got this going. You're like, yeah, here's my zones, here's my sub chart. I'm ready to go. Oh my god, I just lost 4 trades in a row. Oh well, here's a setup. Sure, yeah, I'm not going to take that one. That's exactly where you make the mistake. If you have the edge, and this is my point, if you have an edge, you don't have to question if this is an edge. If you're going to take my word for it, or you can plan back yourself, like I said. If you want to take my word for it, it's the best edge I've ever seen. So you just keep taking the damn trade, because over a series of trades, and that's why I said to you guys, all these are going to be these will all be profitable over a long series of trades, because I know I have the edge, right? So if you have it, you just keep putting it on. You don't say, well, this one doesn't feel right. This one feels great. It's if you have your parameters, aka your risk. That's the whole theme of this webinar, right? Is your risk. You have your areas, you plug this stuff in, and you put the trade on like a casino, right? Talk about it all the time. It's the best analogy that can ever be made. Trading like a casino, right here, right? Object is, so this is the exercise.
So hold on, Scott. I think it looks like the screen has frozen here.
This is good.
Yeah, try this again. Just a moment. Maybe try go. I'm still looking at the Russell. Switch to a different screen and come back.
Yeah. Wait, I'm not in the right room here. Hold on. Just try this one more time. I'll try on this original one first, and then we'll right here.
Okay, so now I see trading in the zone. Yeah.
Yeah. That's
okay. Okay, great. All good.
Sorry about that, guys. I think someone on my trade room was telling me that, but all right. So what I was getting at here is, you want to trade. This is straight out of his book, learning to trade an edge like a casino. So when a casino's dealing cards or letting the people roll dice or whatever, they know some people are going to win, right? But they know over a long run, they may have a stretch of days where they're down millions of dollars. Do they just close up shop and close the casino and say I'm done, or selectively let people play a certain game and then other ones they close down those games? No, they let it all run because they know over a series of play, aka trades, they're going to be a winner because it's math, it's an edge. So that's the point, right? So I'm going to try to limit this rant, but this is so important. This is the most important, right? And the 5 truths. Anything can happen. You need to know, or do you know? I added that in. What's going to happen next in order to make money? You don't know what's going to happen. All you know is what you're seeing real time, and you have your rules for trading it, and you put the trade on. That's it. And then you let it work. You sit here, and most days when nothing's going on, like right now, you get tortured to death by all these algos just playing games with you. Again, if this comes up and stops me out, on to the next trade, right? I don't sweat it, as they say, right? It's like, okay, that one's a loser. Next one could be a winner. Next one could be a loser. Next 5 can be a loser. If you have an edge, you just keep putting the trade on. Anything else, Bruce?
No, we're all caught up.
Okay, so here we go right here. Again, if you guys don't want to hear swearing, then mute your computer because I'm sure I'm swearing here. So long 419. So this leads me to what I was trying to tell you here. This is the counterparties that I was trading against. So every time I put a trade on, I could see the exact house. Again, it's kind of blurry. I could see who I was trading with. So most days I was going head to head with this guy from 990. Again, Google it. You can read all about it. He was the most hated trader on the street because I don't want to get into it, but he was just not a light trader. But I can see, so if I would jump up and buy 400, I can see, hey, that's 910L or K, whatever the hell it was back then, right? So I know from trading against them so often, all day, every day, basically, how many you can put on. So say I had him load them up, I could put up to 3,000 on. I have them loaded up, and then I would try, if I had some bullets left, and I would keep trying to push it until he puke, and he would do the same with me. Where I would be like, oh, something's up. Say I jump up in my 419, and I look over here, and it's houses that I've never seen, or I know Merrill Lynch. What was Goldman? I think was 660. I can't remember all that. 714 was FEMAT. So the point is, if I would jump up and I look over here and I'd be like, yeah, I don't know that house. I better not be screwing around here, right? It's not a local. They will call the guy, like, from the other trading firm. They call those locals. Those are guys like in the pit days, all the locals standing around taking the broker's orders and playing games. It's the same stuff that was in here. If I would run into a house that I didn't know, I'd be like, okay, beware, aka, what is that? The big money. That's this, right? So that would be this stuff. So you're screwing around. I'd be in here scalping around. All of a sudden, I'd be selling something. I'd be like, "Oh, wow, who is this? I've never heard of it. Oh, wait, they just took 3,000 of my orders. I better get the hell out of this trade." This is what this is showing you. This is showing you the icebergs, aka the big money. They have to hide their orders. They cannot flash. So they bought 13,000 contracts, according to Bruce. Again, I don't have the. I'm not using the CBD or the sum method. I'm using the spikes. That's how I trade them, because that enables me to draw these areas and trade off of them. But the point is, they absorb 13,000. If they were to put 13,000 in the order book, if they even put 1,000, look at the order book now. Now look at this order book right now: 100, 140 versus what it used to look like. And this isn't even. I'll show you another video where it's like thousands up. Actually, this wasn't too bad, right? And this was still bigger size in the order book. I'll show you another video where it's thousands up. So this is what enabled me at the time to be a scalper. I get long 400, and I turn around, I look below me, I'd be like, okay, there's like 3,000 below me. If I need to get out, I can get out. Nowadays, you would look, even if this size was in there, the market comes down to it, and then everything pulls, and it's like a bunch of 10 lots or something, a bunch of 100 lots, and then I gotta pay down 10 ticks to get the hell out of my trade. That's why the scalping stopped working. So what I was getting at here, we'll finally play this. What was I getting? Oh, so that's the point of icebergs, right? So if you're seeing icebergs, it's the big money. You can't put big orders in the actual dome depth of market order book. All they have to do is show a percentage, and I think it's 10%, right? So say this person had, I think this was 700. Well, all they really got to put in the order book is a 70 lot. And then once it gets traded into, then the rest of this populates, and there's actually 630 behind it, right? So that's what I'm saying is I would be screwing around, and I'd run into something like this back then. And I think they had icebergs back then, or they just started to. And I'd be like, oh, that's big money. I better get the hell out of this trade. I don't want to screw around here. See what I'm saying? But you get to see this information. And my theory, again, it's just a theory. This MBO data that the CME has offered, that the Rhythmic, as far as I know, there might be one other data provider now, the only person that shows this enhanced data. What I think was going on back in like 2015 to 17, the retail trader was dead. Like it was basically shark eat shark in here. It was big money versus big money. I think, again, just my opinion, could be completely wrong, that the CME decided to throw the retail trader a bone and say, okay, we'll let you see this information if you guys get back in the game, right? Because the big money, they're taking your money, right? They're not going to do well if they're just going against other algos. They're going to do well. The retail traders in here, and I'm a retail trader nowadays too. I'm a much informed retail trader, but most of them are not. So they're in here to take your money, right? So I think this was, let's throw them a bone, let them see what's going on a little bit in here. But again, this is the most important information that you can trade off of, in my opinion, especially in important areas. So let's go ahead and watch a little bit. And if there's questions, Bruce, let me know. Again, cover your earmuffs if you don't like swearing. And I apologize for the immaturity of this, but here we go.
You got that news?
It's cutting in and out too, which is good. So you can see me just flipping. Now I got 500 on short. Right?
Weird. I wonder if they got us before we did.
So now what I'm bitching about right here, I know what I'm bitching about, is the number. Right. So I'm like, I wonder if they got the, I still bitch about the same thing today. Ask my trade room. I wonder if they got the information before it was released. Right. See a little more here. You can see, like right now, I'm trying to get this. I barely make it out, but I think it's 9-10 out. Maybe not. So I had a thing too, so you wouldn't cross your own orders, right? So you can see like my offers are in here, right? I'll have like right here. Here's an offer, right? But you can check a thing. This is Trading Technologies, and they're still around. You, if I would, so I'm 300. I think that's 300 of these 700. Well, I would go up if I even try to buy any of them, it would cancel my order. I mean, in milliseconds, where I wouldn't cross my own orders, right? Because that's illegal. And so you would have it checked where you don't cross your own orders. So it looks like I'm trading into myself, but I'm really not. Let's watch a little more of this and answer some questions. You see, I'm long, and I'm just putting in offers, trying to get the hell out of the long now. See, now today on this day, I'm getting killed. I just said I was down 9 grand. Actually, that wasn't getting killed back then, but this is great just to see how active I was. Now you can see how I traded 1 million contracts a month. There you go. No comments, Bruce? I thought you'd be commenting on this.
No. It's interesting. It's really interesting to watch.
So you can see, like, I was just in and out all day long, flipping. Let's try to find one other. I think there's one of these in here. It's pretty good that I didn't swear that much there. I'm proud of myself. Let's see here. I just want to show you a video where there was like thousands up. And that's, I don't know if any of these have them. This one might not. I think 2000. Let's just take a look here. Any questions on that? Fire away. There's not much question. I mean, it's like I told you guys, it's nothing like ridiculously exciting. It's just watching me flip orders, but you can at least see what I used to do, right? And you can see that it all stopped working. So this day I was actually making money. And this might be the same day. I have no idea. This was 20 years ago, but just trying to find where I had some size on. So here. So you just see what I did there? So I bought the next tick. I'm long 325. I bought the next tick, and I started dinging this order to see if it was the jackass that I used to trade it against, or if it was big money, or if it was a house I didn't know. So I would do that all day long. I would just ding with one loss and it would show me who it was. Right. So it was like playing a poker game. And there wasn't only one local in here. There were other locals too. But I would be like, okay, who is this? Is this the 990 guy I was trading against? Okay, I'm going to swipe those orders from him. If I ding it and I see it's a big house, then I'm like, okay, I better back off here and get the hell out of this trade. So I was doing this in literally flashes. I mean, it's still amazing to me how quick because I process things very quickly, obviously. But even looking at the P&L, I'm trying to catch myself to see what my P&L was. I look at it so quick. It's like, how the hell did I even see what my P&L was that fast? You'll see it. But this is the other thing I was getting at too. When I finally took off as a trader, and I tell you this all the time, I took off the targeting computer. So if you Star Wars nerds, that's when he turned off the targeting computer and blew up the Death Star. The minute I stopped staring at my P&L, watching it uptick, downtick, tens of thousands of dollars every trade, that's when I took off. So I would just be in there trading. Then I would pull this up at 2 hours into it. I'd be up like 120 grand or whatever. I'd be like, oh, that's better than I thought, right? Just watch a little bit long, see what happens here. I'm interested to see how I'm tagging that to see who it is. And I'm like, so you just see what I did there. I tagged that order and I'm like, yeah, I probably want to get out of some of these. So I pulled my bid. I remember I had a bid working right there. I pulled it, right? So this actually, the size isn't even that big right here. And you can see out of this 1,200 lot, I think I'm 500 of them. Let's just watch a couple more minutes of this. A couple more seconds of this. It's not that exciting, but yeah, you can see what I used to do, guys. That's about it. So here, I want to see if I look at my P&L. This are the glory days. Guess not. I must have been having a good day because I wasn't looking at it. All right, so that's it. That's what I used to do, guys. So that's why I have such an understanding of order flow and what guys are doing. And when the big money's loaded up, because when I was loaded up with 1,000 or 2,000, I know what I used to do and hold my breath and everything else. So there you go. Any questions on that, Bruce?
Don't see any, and I think uh, it's a little cryptic to see maybe another time, like a little bit better explanation on exactly what you're doing. But that helped though, your explanation, because otherwise I wouldn't have gotten it. I was like, I can barely kind of follow what you're doing, and
Oh,
it's
I
hard to
could really
hear.
follow what I was. It was more of a feel. Like it was just a feel
Mm,
for order flow, right? I can just feel when orders were coming in and when they're real or where they're going to pull, and that's all I was doing all day, every day, right?
mm,
And again, it
mm.
does. The whole point of that is it doesn't get any simpler than trading straight off of this thing, right? The dome.
Yeah, yeah.
This.
It's
Right?
really interesting. I mean, you see it with the algos doing it too. I mean, like today, like they're just like you were doing, just testing, 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 and
Right.
then seeing, and then and then letting it run, and then testing, testing, testing. Anyway, yeah, it's same. Is like you say, the same games again and again. Just a different speed, and different players.
Right. It's just now it's all automated, right? So they're
Yeah.
not doing it by hand per se. And if someone's still doing this by hand, congrats, because as you can see, I was one of the fastest on the planet back then, and I was definitely one of the biggest traders as far as volume every day. That's why I keep telling people, right? These traders that want to try to scalp and think they can risk two ticks to make four and over and over and over. Guys, I like making $15 million, right? I like that. If it was still possible, don't you think I would still be trading that way? Right? It's not. It's you are wasting your time if you're trying to trade like this with these. I was one of the fastest in the world. I'm not as fast as a computer, right? So that's why I went from multimillionaire to that because I could not click as fast as a computer can. So stop wasting your time trying to trade the dome and look at the orders in the order book. I don't even look at this stuff anymore. I look at I mean, that's another great thing about Bookmap. You can see what's relatively big or not by the heat map. This is just showing you what's in the order book here, right? I don't even look at this stuff anymore. It's a waste of time. I look for my volume events and I have rules for trading them. Speaking of which, there's a gold stop, a puke. By the way, that Dumb and Dumber. So if I would have been short here, what would I be doing right now? Right. So I completely missed this trade. This is the Dumb and Dumber, one of my 6 distinct setups. I'd be short, and then I would trail my stop now to that. Right. And now there's a way potentially we can go long here. Let's see what this is. See if this is an important area. Seeing a crude trade. This is technically an IZZY, right? So the market moved out, back in. Here's your volume event, and that's right at the top of that puppy. So I will take this IZZY long. That's just one trading strategy. That's this. Inflection zone trade. Usually an aggressive entry, meaning the first move out. We're not waiting for the retest, like retest confirm, like we do on the bark and the lick that I talked about earlier. So let's just again, if you get this drawing tool, don't trade off the chart unless you know your ATR is correct. So this, you can see this ATR right here showing me saying it's 52.5 or 5.25. The real ATR is 5.01. So it's not that far off, but it's not perfect. So these entries and exit areas are not going to be the same. I got to plug this in the spreadsheet, right? So this zone is 2341 is the top, bottom's 2338.2. So let's put that in 2341.9. So we go to the spreadsheet, 341. This is all back to the risk management stuff. I put this in, it's going to tell me how much I can risk, tell me where my stop is, where I enter, and then I put on the trade, potentially 2338.2. ATR, what did I say? So it just dropped actually. So now it's 40.4.76. It's just telling me it's rotating about 47 ticks every 5 minutes. Very, very, very important information. I'm adjusting the volatility and volume, real-time volume events. All right, so if I go long this, I can I get in at 2347.4 or the last two digits 74. I can put on 4 contracts with this kind of risk, right? This is showing me 79. So this is off a little bit. I'm going to take 4 IZZY longs, and I'm going to trade this one double size. 74. I'm going to trade this double size because it aligns with my thesis. So what does that mean? So the way I trade, I'm a day trader. I'll trade longs and shorts all day long, kind of like you saw me flipping the order book. But if a market conforms, meaning if I'm bullish this market, and I am right now, based on what right now, it could change. This is a balanced breakout. All it did is pull back to the top of this. So that's bullish. And this market's already been bullish, as anyone who's traded it knows, right? So I'm willing to, my thesis is this is long. If this balanced area were to invalid, fail breakout, which is one of the best trades out there, meaning if it does this, and gets through this, well, then I would change my tune and I'd trade double size shorts. But for right now, this is still bullish. This is not, even though this is pulled back here, this is a selling tail. That's not very bullish. But point is, until it violates the high volume node of that balance area, my thesis is long. Does that mean I just jump in and long? No. Then I wait for my volume event. So I'm willing to take this Izzy trade now. And if it confirms as a bullish setup, I'm going to take it double size because the volume event, something that's happened in real time. Again, I'm just outlining it on this chart. It's this. The volume event is bullish. My thesis is bullish. I take it double size. And then I'm in, and then my stop goes down here, right? So again, the spreadsheet, or this heat map, the drawing tool is supposed to show you. So this says I'm out at 23 if I get filled on this. Again, don't mirror my trades. Learn to do this for yourself. The actual exit based on the real ATR is 27, so it's off a little bit right now. And that's all I do all day long, guys. I'm waiting for, I do not trade in these areas. We didn't even get into the Ludwig levels yet. The second most powerful thing I've ever seen, right? I don't even trade, and I already know how ridiculously powerful these things are as far as support and resistance. She calls them big red, big blue, and then you got the baby lugs, we call them, right? So I won't even trade a bounce off the blue lug unless I get a volume event. I know how powerful market profile composites are. I don't put on a trade unless I get a bear. Like for instance, I need a bearish event right here. So that's what I'm trying to explain to you guys is if you are going to trade and you don't have this information, then you just don't have all the information, right? And I don't care how great of a trader you are. You can be 10 times better if you understand how to read this in your important areas. So that's, I say the same thing every day, all day. Any other questions, Bruce?
No, I think we're caught up.
So we got an auction too. Those have been having an impact on the markets too. So I'm holding that Russell short into that too. So again, the trade sucks too. So another rule of thumb, basically between this time of day, 10:15, 10:30 to 12:30, I've lost, this is specific, but it's 10:30, obviously central, millions and millions of dollars trading between this time period. Why? Because this is when New York, the big money goes to lunch, then Chicago follows, and then the algos just start running you ragged, right? So if you are, and we did an experiment with my room, like 2 or 3 different traders showed their P&L. They're on the Trader Sync. By the way, that's another thing. So you get discounts to all this stuff on that's that document, right? But this is Trader Sync. You should be entering in. So many traders are taking off when they're using this. So this, for some reason, I don't have my thing on here. If you try it, then you get a discount on it as well. I don't know why they don't have it on here, but anyway, this will tell you everything you need to know about your trading. So a couple traders brought up there, because all I would say is don't trade. So every product that I traded, it looks like this, right? You'll see like 8 o'clock hour, 9 o'clock, this is positive, right? And then you would see literally every single product looks like this between 10 and 10:30 and 12:30. Central. Negative. The traders that posted in my room, every one of them looked the same way. If you can, don't trade this time period. There is a caveat to that. If you want, if you're watching it, just demand high relative volume coming in, right? So this is the relative volume chart. So this is telling me, this is on Sierra chart. Thinkorswim is not the same relative volume, so don't use that one as my recommendation. This is showing me, because Thinkorswim is just showing you last 65-minute bars. That's not relevant to me. What's relevant to me, this is showing me the relative volume at this exact time period for I have it set for 30 days. So I know, this was obviously the GDP number, but I know this was trading, 3-4 times normal volume for this time of day. Really important. So if you're going to trade at this time of day, I would demand at least 200% to participate. If not, you're going to get algoed to death, right? So that's my word of advice for that. Let's take one quick look. I heard something on crude. I might have missed a trade here. So my thesis for crude, this is what we do every day in the room. I go over these markets and my thesis. This is a very important area for crude. Right now, it's still bullish. What happened here? And guys, this talk about simplicity. This is all I really look at, right? I look at the lugs and stuff like that, algo guy, but you need to understand markets are in two states only. They're either balancing or they're trending, balancing or trending, right? So balance areas are just traders placing bets. Very important information, the information, because when it moves out of there, traders that are wrong are going to be puking. So what's going on here? Why is this such an important area? Well, crude tried to break out, and you can see what it's fighting. It was fighting this prior balance, bounced off that. So that's already telling you something's up. Like this, maybe it's not as bullish as it looks, right? Because if it was bullish as it looked, it would have at least got into this guy. It didn't happen. Now what's happening? This is looking like it might. This is one of the best trades out there. We have this. This is called failed balance breakout. The trading strategies. I just added these new ones, and I'm going to have a course for these very soon, and it's going to be a continuous learning course too, because I have about 50 more of these in my head that I'm going to be putting down. We talked about that earlier, but as I add them, if you get that new course, you're going to get access to the new ones that I put them in. Anyway, right here, failed balance breakout, FBB for short. Aggressive failed break of longer term balance on an hourly chart. Well, I say shorter term, but just stick with hourly. When the market travels back through the balance area, HVN, high volume node. Trades are taking aggressive on the first volume event. So what is that? That's why I'm saying this is so important right here. So the market tried to break out, didn't do it, actually built balance. So this is another trading strategy. We'll get into that here in a second. The point is you want to watch this area as in just an area, right? It's not an exact price. I'd say 81.60-ish. If this market breaks down, and it's real close and only about 60 ticks away through this volume or through this high volume node, HVN, any setup I get, I'm taking aggressively and I'm getting short, meaning first move out of that volume event because that's a failed breakout. Then we have another trading strategy called breaking bad. It's when you have current balance, and there's I could put on both of these, by the way. That is when you have current balance. This is multi-day right here, Tuesday to Thursday or Monday to Thursday. These are traders built up here, right? So that trade is when you break out a current balance through the high volume node or prior balance as well. And then, so it's right around the same area. So I could put on two different trading strategies if that happens, is what I'm saying, right? And that's this one here. Breaking bad. Current balance breakout through the HVN of preceding balance. Trades are taken aggressively on the first SI event. So this is shaping up to be that happening, right? Right now, we got a volume event in this Izzy zone. So I could potentially take a long here. In this instance, I don't want to confuse people, but this is a variation of Izzy. I'm not going to take this. So Izzy's are usually fade trades into these zones, right? Well, why do I not want to take this aggressive long off of this volume event that just happened right here? So it's this event that happened. I missed it, but this is it, right? Why am I not going long aggressively? I should pretty much already be in. I think it already touched the aggressive. Well, because this is this caveat to that usually they're aggressive entries, meaning the first move out, meaning I should probably already be along that. This is, in the case of a zone that is directly below right now, multi-day balance, trade is still taken, but needs an ATR retest confirmed. So because we are where we are on that chart, right, this is breaking below the current balance, right? Here's your current balance, multi-day balance. Do I want to jump in longs aggressively right here when I know these traders, these longs are underwater? This thing could do that, and I think that's what's going to happen. I don't know. Nobody knows, right? That's why I trade the volume events and what they tell me to do. Point is, I still could take an Izzy long, but I need to see the ATR, which it got. I need to see the retest, which it just did. Did we talk about this trade today? Yeah, I think we did. Reversion trade. Moves back out. Then I'll take the Izzy trade, but I need to see that confirmation in this instance. Then what you look for, if this does hold, or I would trade double size of longs if this does this and this. That would be a failed balance breakdown, right? So this is why I'm saying this is such an important area. Whatever happens here is going to tell you very likely the next big move in crude. If it breaks down, which I think it's going to, just guessing, right? From, because it couldn't get through that guy and it failed, then I'm going to trade double size shorts here and below. If it does this, I'm going to trade double size longs. If then scenarios. I have no idea what it's going to do. I wait, and then I let the real-time volume confirm with my rules, with my risk rules, the whole idea of this webinar, right? Any questions on that, Bruce?
Let's see. No, still good.
I'm just going to plug in this zone real quick so I know that price if it comes back. ATR in here is right now 19.19. So if it comes back, I can go long at 39. I could put on 10. Again, you could put on one big one. Why do I want to put on one big one and it's all or nothing when I want to get out? If I put on 10, I can get out of 3 in a certain area, 3 in another area. And those areas that we go over every day in my trade room as well, that's in the Trading the Zone document. That's these areas. So that, again, right out of the book, I pay myself as the money makes money available to me. So these are my important areas where I will piece out of the trade. Ludwig levels, I usually get the major ones. I usually get out of the full trade, but market profile, composite highs and lows, points of controls, VWAP, standard deviations, spot gamma levels. We haven't even talked about the hero. Let's just take a quick look at the hero before we hop off here. I'm logged in. Very important information. This is just the options information that's going on. These guys are important players in the market. They're not the only player in the market, but when these options dealers get loaded up with options, they turn around and hedge in the futures, right? So in this case, someone was buying options. The dealer's selling the options. They're on the other side. The dealer has to turn around and hedge themselves by buying futures, right? So you can see that's exactly what happened here. Nothing's going on. Their activity is controlling the market right now. It's important to know they're not the only player. Most times they're one of the main players, but other times, and this is another trade strategy right down coming down the pipe here. Sometimes you'll see something like this. We've seen it. We just saw it the other day, where the market, it was actually the other way. But say hero, and it actually did this. So we say a billion notional is a big move for the options in ES or SPX. This moves a billion this way. That means dealers are buying futures. Well, why? And then the market just spins. It's telling you something's up. That means somebody's absorbing that activity. So what does that mean? Well, nothing really until if this decides to turn back down. Well, what do you think it's going to do if it couldn't go up with that, aka divergence, and then this turns back down? This thing's going to get smoked, right? Just on that's giving you an idea, right? So what does that mean? I just get short? No, I would wait for a volume event and trade the rules off the volume event. That's just another strategy that's coming out, but you can use that. There's discounts in that thing for spot gamma. You can get 2 weeks of spot gamma for that, and that link that he posted, or that right here. I think it's Scott. 2 weeks. You get the hero. You get it. Just his commentary alone each day is. So this is his thesis, right? So you can imagine if you go in here, founder's notes, and you read his thesis, and he's like, we're not going to really get into this right now, and plus he's talking about individual stocks, but he'll be like, all right, if we break 5,000 right here, we continue to look for 5,000 areas major support in F51 FOMC. And then, sometimes he goes down. He's very, very, very bright, right? But I don't remember we talked about keeping things simple. I don't need to know, I just need to know, okay, what's your call? All right, if we break 5,000 SPX, I want to be short, right? Then I combine that information with my thesis. This, speaking of important areas, extremely important area for ES. This is where it did its usual bungee jump. Where are we at? This looks just like crude, doesn't it? It's right at the top here. This is the line in the sand. I'd say 5,010. If it breaks that, my thesis is it's going to get crushed. I'm going to trade double size if that happens. Right now, it's not exactly bullish. Why? Well, because it broke down from this guy. Remember, one of two states: balancing or trending. Balancing or trending. Gaps are trends. Trend moves down, right? So I don't have an opinion right here. If it breaks this, I'm trading all shorts double size. And he just confirmed with his analysis that what price is this? SPX is, he's talking about the I screwed it up. I took off the cloud notes on here. Anyway, I think it's like a 40-point difference. I had the cloud notes. I deleted it somehow when I put this order book on here. But anyway, so he's saying if we break 5,000 SPX, it's in big trouble. I'm saying if it breaks 5,000 5011 in the futures, it's in big trouble, right? So now I can trade bigger. If this happens to come back here, which it probably will, because it does it every single time, it feels like, that would be a failed breakdown, and I would trade double sized longs above there. Right. So that's how I do it, guys. I come up with a thesis. If the volume events match, I trade bigger size. Otherwise, I'm just trading around as a day trader in my important areas with the volume events. The most important thing I've ever seen. I don't know if I mentioned that. All right, Bruce, kind of out of gas. I don't know if we can keep going if you want. There's nothing going on. Any questions? I will.
No, sir. I think we're all set. We put the link in there for the document, etc. It's been pinned, so you guys got it in YouTube, also in Discord. No, that's everything, Scott. Thank you very much. Great to see all these developments and new strategies and new software and everything. You're really owning your process.
Right. You got to evolve in this game. You guys saw me, what I used to do, right? That disappeared. It doesn't mean you just keep throwing stuff into your trading. You've got to be ready to evolve and make it better. And that's what we're doing, right? So it's continuously, there was a guy who was commenting yesterday. He's been in the room for 2 years. He's like, I've been gone for a couple months and there's just so many new things to learn now. This is awesome. Like he's evolving. That's what you got to do if you want to stay in this game, right? And again, it's not me just throwing new stuff in, but like the zone drawer and the ATR and everything else, like this is all added as we're just getting better and better and better. And it's just giving us the ability to compete with these algos and the big money because they are trying to take your money. Believe it, know it, it's a zero-sum game. That's what's happening. All right, anyway, so this is why you don't trade this time of day. No, I'm just being tortured here, right? So stops up here. I held it through the number thing, and I was willing to do that. But, it's either going to do this and I'm profitable. If it does that, I'm out of the trade, on to the next trade. If you have an edge, that's what you do all day, every day. And that's what we do all day, every day. But Bruce, thanks for having me. I do this every day. I get emails all the time. Can I have a trial to your room? I don't do trials. This is the trial, right? These Bookmap webinars are exactly what I do every day, twice a day, most days, unless it's terrible in the afternoon. I do this exact thing. Go over these markets, put on trades, talk about the trades. And there's just too much information that you get that the people that my traders pay for that I can't just let you in the room. You have access to everything that they're all paying for. You see what I'm saying? So there are no trials. This is the trial. So there's first time. Do you have like a number? How many webinars have I done for Bookmap? It's got to be at least 300, I would guess.
Oh God, I don't know.
in 7 years, it's got to be.
Yeah, I have no idea.
I mean, at least 20 a year, right? At least, probably more than that. So the bottom line is just Google Bookmap, YouTube, Scott Pulcini, and you can watch 300 plus webinars to understand what I'm doing. You can go to my YouTube channel. I post a lot of the live webinars I do for the room in there too. Or I mean, not live, but the recordings. So my point is, if you want the trial, all you gotta do is watch that and see what I do. It's the same thing I'm doing in here, which has been absolutely nothing today. Once again, just another webinar with I put on one Russell trade, but that's the way that, guys, these are markets you got to accept. And when it's trading like this, you're not forcing trades. Actually, I'm supposed to be long crude right here. Was I not? Hold on. And then I'll hop off. Remember we talked about this? This is the Izzy trade. Of course, I forgot to put this on. So I'm long. So what did I do there quickly? I already knew what I was doing here. So when it came back, I should have my order resting. I'm sorry. We're supposed to do it on the doesn't matter now, but let's just do this real quick. It's just I'm gonna trade big on this. Guys, this is for functional purpose only, and this is on sim, right? So I bought 10 big ones, right? There you go. There's my entry. There's that yellow line. My stop goes down here. There. You can't see that column, but it's there. It's working. You can see it. And that's it. Then I watch as this market. I just made a mistake here. What I should have done, because I do not like entering in prior events. I like to wait till it gets out of there. So I'm actually going to scratch this. Of course, it won't fill me. Hold on. Why did that not let me out? Here, let's just do this. So now I'm going to get in up here just because I don't want to enter in this prior zone. So you can see it working right there. No, that's a stop. Sorry. Yeah, buy stop. So I'll buy stop into that. There you go. So I'm long crude. Remember what I said about these markets. If crude breaks higher, I'm going to be trading double size long. If it goes a little lower, I'm trading double size shorts, and the same with the ES. Other than that, I got Mr. Russell on.
Just
All right, Bruce.
just
So
a note on that, Scott. That was a stop limit. So once it is touched, it will unpack into a limit order. So if there's a book sweep through that area, you will not get filled.
I will not get. Yeah, we forgot to go over this at length today.
That's
As far as
fine. It's
using
just
it.
it's you'll get a good price, but only if it doesn't trade through it quickly. I mean,
Right. No, yeah. Because if you go stop market, then it fills you at any price you want.
exactly. Once it
I
unpacks,
mean,
it
not
becomes
that
a
you want,
market
not a price that you want, but it'll fill whatever price is available.
right
Right. So
after
you can
it's
see it
hit.
actually.
Yeah.
Right. So here it is working. You need these columns on here. I took them off because I don't trade off of this. I trade off the arithmetic stuff, but there it is. All right. That's all I got.
Yeah. Excellent. Excellent. Thanks, Scott. And everyone, I put in the contact information for you. So if you're interested in just reach out to Scott, and he'll be happy to answer your questions and go through anything that you need there. Yeah, thanks so much, Scott. And we'll have to do another one of these soon with you.
Yeah. Let's hopefully we can get a day that there's actual trade. That would be great. But I hope you guys learned. I hope I got through to you on what we're trying to do, what you need to do if you want to be successful. You can't scalp tick for tick. You guys saw what I used to do. It just doesn't work. Just this. I mean, in my opinion, again, that's the great thing about Bookmap. You can get it. You can get the data feeds from me or run your own. Play the day. Test this out yourself. Confirm the edge for yourself. But if you want to take my 25 years of experience and listen to me, the best edge I've ever seen in futures markets, bar none. All right, that's all I got. Thanks, Bruce, for having me.
Okay, thank you, Scott. All right, have a good day.
Yeah, you
Bye.
too. Bye.